My name is Alison, head of corporate department in Mysteel. Thanks for inviting me to the Bonded Copper Futures Seminar 2022. Before we start to go through the slides, I'd like to start to share with you my key points I want to present today. Copper has underperformed the fundamentals in 2022 and because of macro headwinds, and fundamental is set to play a key role in 2023. So since Q2 2022, macro headwinds, the tapering, the broad rate hikes, and across the Western regions, and COVID-related demand disruptions, and property drawdown in China have been weighing on commodity prices, especially on copper. Copper has been the worst performer in the commodity peers, as it is more macro-driven commodity. Copper price, you can see red line in the left chart, has been underperformed the other metals such as silver, zinc, and even iron ore and rebar, who have higher exposure to Chinese property market. Copper price is highly correlated with macro policies, macro data, and sentiment. Currency, especially the US dollar, bond yields, and inflation expectations played a key role in copper price trends historically. Ex-China tapering, rate hikes, and China's zero-COVID policy have been dominating the market and playing a key role in copper price slump in Q2. While fundamentals have been improving gradually, especially in Q3. So despite the macro headwinds, strengthened time spread, and persistent backwardation, you can find in the right chart, points to a resilient fundamentals and also provide enhanced returns for bull returns for bull position keepers, and in addition to the spot price move. We had 6 rate hikes in US this year since March. US 10-year real rate has hit years high. Ex-China is likely to slow the pace of tightening because of increasing concerns on labor market and economic growth. So smaller rate hikes with extended cycle in the US is probable, as inflation is likely to remain high for quite a while. Peak Fed funds rate expectations was raised to 4.7% to 5% or even higher. Other countries probably step down the tightening pace as well, amid a slowing trajectory of global growth and recession worries. So as downside price move had dominated the market since almost the whole late Q2 and Q3, we think worries toward recession risks have mostly priced in. Strong US dollar may continue for some time, but the rising US dollar will likely be slowed on peak Fed rate expectations and economic growth in EMs and recovery in the other countries. The upside drive to metal prices by US dollar reverse will be dramatic. In addition, the rising rate in the US curbs liquidity and credit, reinforce the tightness in supply side in commodities. In China, the reopen expectation has inspired the market in the past several weeks. The State Committee of the Political Bureau of the Communist Party of China discussed and arranged changing measures to further optimize the epidemic prevention and control work last Friday. There are broad signals around China's pullback in previous strict dynamic zero COVID policy, such as shortening the quarantine time for travelers and close contacts of infected people. Close contacts will no longer be identified. Those signals triggered incremental price moves and in the share markets and commodities last Friday. In terms of the biggest concerns in China, the property market, China has recently expanded bond financing support for private enterprises, and including those real estate companies. Measures include debt issuance through guarantees, the use of credit risk mitigation certificates, and the direct purchase of bonds. This market actions and the market also expected those measures will support around 250 billion RMB of private or the owned enterprises bond financing, and capacity could further expanded. Other measures like easing home ownership rules, interest rate cuts, and subsidies, down payments rate decrease. After these actions failed to revive the property market. The easing measures towards property sector are to prevent the systematic risks in China, while the government continue to maintain the medium term or long-term goal of deliberation, with the divorce will likely continue to emerge. In addition to the policies related to property sector, the government also released the positive financial policies towards infra and manufacturing sectors. October new total social financing addition was 908 billion RMB, suggesting the remaining weak credit demand, albeit a strong expansion in September when raising credit line of policy banks. And besides, 3.4 trillion special purpose local government bonds was issued in the first half in 2022, a historical high level in recent years. To be specific, 62% of them was for infrastructure projects. What's more, in early November, the regulatory authority started to issue an amount of upfront special bond for 2023, significantly higher compared with that of 1.46 trillion in 2022. So I'd like to show two interesting charts, copper price and industrial production. If you look at the left chart, copper price is highly correlated with industrial production, but it has decoupled with that IP data since May. We have discussed the reason in the previous slides. Fed rate cuts has exceeded expectations. The continued strengthening US dollar, the demand distortion on structural transformation, and short-term pain in China. In the right chart, finished goods inventory has been declining since May and has fallen back to level of October last year. Rising IP and declining finished good inventory indicates that the economic momentum has been picked up and the restocking is likely to be seen after the passive destocking cycle. Before starting with the fundamental discussion, I'd like to give a conclusion on macro. Macro headwinds has posted dramatic downside pressure on copper, while persistent backwardation points to resilient fundamentals. We expect fundamentals to play the key role in copper price moving in 2023. Global copper concentrate supply growth has persistently been slower than pre-2008 crisis level. Uncertainties in global economic growth, geopolitical and environmental pressure, reduced mineral resources, decline ore grade, increased the cost on epidemic prevention, higher logistic costs, processing costs, energy costs, and labor costs, water scarcity and political landscape, taxation policies, changes concern in Chile and Peru, and concerns on global warming, the carbon emission, sustainable development, and social responsibility. All of these add downside risks to the copper mine production. So we expect a downturn in copper mining cycle in 2025 before an incremental growth in 2023 and 2024. China produced 1.8 million tons of copper concentrate 2021, an increase of 7.9% from 2020 level. Further release of new capacity at Yulong Copper Mine and in Western China, underground expansion projects at Jiangxi Copper's Yingshan Mine and the Duobaoshan Phase 2 project expansion. China copper concentrate output expanded further in 2022. New capacity lining up from Phase 2 project of Chilong Mine. But actually, new projects progress has been slower than expectation on environmental and emission concerns. And we are approaching to 2 million tons mining capacity ceiling in China. We expect further supply additions from Duobaoshan Mine project, which is remaining under exploration. Scrap copper can help fill the mine supply gap and will balance the supply and the demand. But we had researched scrap generation in China in the next decade in order to discuss raw material feed. The life cycle of copper in construction industry is about 30 to 50 years. And life cycle in electronics is about 20 to 30 years. Life cycles in machinery, transportation, and home appliances around 50 to 10 years. So on average, the life cycle of copper is around 20 years. And as we have seen, China copper demand grew rapidly since 2000. The average growth rate of industrial production reached around 50% between 2000 and 2010. You can find in the right chart, there are high correlations between copper demand and industrial production data. Relying on the above research, we expect the scrap copper generation in China to accelerate in 2020 with around 350 to 400 KT supply additions per year. But economic uncertainty, the new regulations on scrap collection, sorting, and export, and new taxations in China have been posing downside risks to scrap supply in recent years. Disruption rate in smelting has been prominent since 2020. Emission restrictions policies, raw material tightness, financial situations, cost inflation, and event-driven production cuts, combined with regular maintenance. As is shown in the left chart, disruption rate in smelting Q2 was at historical high level. The output impact was even higher than 2019 and 2021, when Chinese smelters carried out their overall maintenance every 2 years. The disruption on supply side fully offset the demand shortfall related to COVID spread in Shanghai and in the other cities. The high disruption rate in smelting and refining has resulted in lower than expected refined copper production. Despite new capacity running up from several producers like Daye, Fuye, Jinchuan, and Qingyuan, copper concentrate TCs reached its top in April and rebounded strongly on increasing mine supply and below expected concentrate demand, as new capacity smelting lining up is slower than expectation or delayed. In addition, the shrinking global scrap supply limits the availability of blister and anode in China and globally, adding to the tightness of feed supply. Smelters have been struggling to make profit. Copper import market has changed materially this year on both macro and micro reasons. Import losses on physical demand. Import losses on rises on physical demand, but fair on financing demand. We see from the left chart, copper import loss incrementally since May on healthy physical demand in China, but imports declined sharply in October on rebounded financing reduced the financing demand as interest rates in the U.S. have driven have risen strongly on accelerating Fed rate hikes since March, and the 10-year U.S. bond yield has risen rapidly. Now that the gap between the U.S. and China interest rate pose risks to currencies and interest rate arbitrage and ultimately reduce financing demand. What's more, China copper import, which tied up closely in financing deals, has reduced meaningfully on liquidity problem of certain trading houses who run around 1/4 of China refined copper trade. High disruptions in supply side and healthy performance in demand side have resulted in a critical lower copper inventory in China. Persistently falling inventory at both social warehouses and as smelters points to a tight market in China and globally as well. Also, spiking copper spread in both LME and Shanghai signals a significant tightness in physical market, despite global economic headwinds. All these tightness are presented by 85% surge of 2023 cancer premium for Europe and a probable 33% increase for China. In order to reinforce our argument on the importance of fundamental, I'd like to present the production activities of copper fabrications. The most important tip I want to share is that refined copper have substituted scrap copper in lot processing in 2022, which helped underpin refined copper demand and global destock. You can clearly find in those two charts, refined copper rod output has outperformed recycled copper rod. The reason is the raw material feed shortage in recycled copper rod production. Normally, scrap copper can help fill the mine supply gap, especially as refined copper price rise normally drive more recycled metals into the market. However, economic uncertainty, the new regulation on scrap collection, sorting and export, new taxation policy in China have constrained scrap supply and strengthened scrap prices. This situation, we think, probably continue next year. Copper plate and copper strip output declined slightly on lackluster demand from electronic sectors. Global household consumption has yet recovered since COVID-19. Consumer confidence remained muted in the past 2 years, and demand from the consumer electronics remained weak. Demand weakness made judged by the slowing consumer spending, the cost of inflation, and lack of innovation of those electronic products. Exports to U.S. To Germany and South Korea surged materially on new energy demand. In addition, according to our conversation to offshore clients, copper products export to Southeast Asia has been rising in recent years on their infra and manufacturing developments. Different to the copper plates, lithium copper foil has outperformed other semi-copper production. Lithium copper foil output in China has been climbing steadily in the past years on EV boom. We also see vast volume of new capacity in copper foil sector in the next several years. The right chart shows the incremental new capacity addition from 2022 to 2026 onwards. The sizable increase in new capacity comes as producers rush to meet persistent surging growth in lithium battery and also to chase market share for greater profitability. It is strong demand expectation drive the copper industry reconstruction and renovation. Lithium batteries a dominant EV and energy storage battery type. China sits at the heart of battery supply chain, from battery material producing to battery production. Lithium battery usage in EVs, energy storage system, wearable technology, and new digital area is set to grow strongly in the next 10 years. According to our research, lithium portfolio demand is expected to double in 2022 to 500 KT and expected to exceed 1.4 million tons in 2025. So we expect the total portfolio demand in 2023 will increase from 61 KT in 2021 to 9 KT in 2022 and exceed 1.1 million tons in 2023. On the other hand, COP2 production fell this year on the poor performance of air conditioner, and COP bar also underperformed as it is highly exposed to property market downturn. So we think COP apparent demand increased by 5.4% year-on-year in the first 3 quarters, with a growth rate of 12.5% in Q3. The strong apparent demand suggests that the COP price has underperformed fundamentals. We expect the COP demand to increase by around 400 KT in 2023, according to our preliminary assumption. So I'll spend another 10 minutes to discuss each sector in the following slides. Right. Firstly, traditional infra has stabilized. Fixed asset investment has been recovering since Q2. And with infrastructure increased significantly, while manufacturing remained depressed. Investment growth in power and heat infra reached around 20%. Other infra increased by 6.6%, 8.6% in the first 3 quarters. That number is much higher than 0.4% in 2021. Among those sectors, water conservation, environmental, and public facility construction are relatively strong. Grid investment has accelerated since Q3. The total investment target in the 40th 5-year plan of Southern Grid expanded meaningfully, up from 33% compared with 13th 5-year plan, in which this distribution accounts for 48%. That the market share of distribution has increased dramatically compared with previous years. In addition, the grid system upgrade is required on strong new energy development. So we think COP demand for traditional infrastructure to continue to expand in 2023. Renewable energy has been expanding strongly since Q4 last year. The newly installed PV power generation capacity in China is targeted to reach 85 to 100 gigawatts in 2022, beat market expectations. China's polyvoltaic copper consumption is expected to increase from 209 KT in 2021 to 450 KT to 550 KT in 2022. The 14th 5-year plan encouraged more optimized development of renewable energy, such as a large-scale wind and solar energy base, distributed development, and integrated development of wind, solar, and hydro base projects. Efficiency intake and storage as pump storage, direct utilization near end users, and renewable hydrogen productions also include some innovations in renewable technology and modernization. So we'll see some market-driven regulations of renewable development and establish a comprehensive and advanced system to support the green power consumption. So renewable energy has been expanding strongly and will continue to rising. In the next 5 years, with the benefit of policy guidance and cost reduction, combined with the carbon neutrality target, the PV installed capacity will continue to increase meaningfully. The annual average of new PV installed capacity in China will be 70 to 90 gigawatts during 14th 5-year plan period. China COP demand on PV installation is expected to reach 850 KT and to 1 million tons in 2030. We expect the COP demand on PV and wind power installation to increase by around 100 KT in 2023. Property has been the main drag, as we have discussed before. The property market has been tumbling on defaults, failures to deliver the homes on time, and sell-offs. Policies like easing home ownership rules, interest rate cuts, and subsidies, down payment rates decrease failed to revise the property market. Easing measures toward the property market are to prevent systematic risk. But as we have argued before, the government may still intend to maintain the long and medium term target of deleverage as we discussed in the previous slides, and as the government has released for several times in the document. COP demand on property is set to contract further in 2023 with a mild decline of around 100 to 260 KT in 2023. Both new and replacement demand of household appliances being undermined by weak property market and the delayed scrappage on uncertainties on economic growth, but traditional and small appliances performance diverged. For example, the output of TVs in the second quarter increased significantly. Output of air conditioner surprised to upside due to the high temperature in summer. The demand for small household appliances such as clothes dryers, electric steamers, floor washers, heaters, and higher air fryers increased significantly. On the back of marginal recovery of property market in 2023, COP demand on home appliances is expected to continue to grow slightly in 2023, with an increasement of around 50 KT according to our prediction. The output of new energy vehicles in China probably doubled to 7 million units in 2022. This has continuously beat market expectations, as the market expected only like 550 million units at the beginning of the year. The number has driving the strong performance of driving COP demand in EVs to increase to around 620 KT from only 300 KT in 2021. EVs penetration rate has reached 25% and expected to exceed 50% by 2025. So we expect EV production in China to firstly surpass the fuel vehicles in 2023. In the long run, we think EV development is set to significantly drive copper demand. Copper demand on EVs in China is expected to reach 1.25 million tons in 2025 and exceed 2.2 billion tons in 2030. Copper demand on EV on China's new energy vehicle is expected to reach around 850 KT in 2023, an increase of 230 KT year on year. In addition, The demand on charging pile and charging station is expected to continue to increase. 1.87 million units charging pile were constructed in the first 3 quarters of 2022, increased by 245 year-on-year, which is the number is much higher than the growth rate of that of EVs. Cup demand on charging pile and charging station will increase by around 120 KT in 2023. Global household consumption has yet recovered. Consumer confidence stayed muted in the past years, and demand from that consumer electronics remained weak after 2020. Cost inflation, reduced innovation of electronic products, higher market saturation, and slowing down recycling cycle have weighed on the demand of electronic products. In the first 3 quarters, output of integrated circuit decreased by around 10% year-on-year. Onshore electronic demand is expected to pick up, while export market will still under pressure next year, with cup demand on this sector to decrease around decrease 40 KT in 2023. So let's go back to the summary slide. 2023 cup demand outlook, as I have shown previously. We expect around 400 KT demand increase in 2023. This is the preliminary assumptions by Mysteel cup team. So if you want to have some more details and the final data, please reach out to contact me. So these are the or what I want to share today. Mysteel has recently developed a set of data series such as copper matte output, disruption rate in China smelting, raw material feed for smelters and fabricators. If you're interested in our database, any question and field free trial is highly welcomed. I'll leave it here, and thanks for your listening. Thank you.